After talking about managing finances and tracking expenses, this lesson is going to be dedicated to help you understand what this means and actually how to track your expenses. Now, managing finances is critical for the success of any small business. Effective financial management ensures that a company has enough resources to operate and grow while minimizing financial risk and maximizing profitability. In this lesson, we're going to discuss the key principles of financial management for small businesses and provide some practical tips for managing finances effectively. The first principle of financial management for small businesses is to create a budget, which I keep on saying. A budget is a financial plan that outlines the expected income and expenses for a specific period, such as your fiscal year or your quarter. Some businesses do it monthly. The budget should be realistic and based on historical data, industry benchmarks, and growth projections. These are the sorts of things that you found out during your market research and analysis. By creating a budget, business owners and managers can plan and allocate resources effectively, monitor performance, and make informed decisions about investments and expenses. So look at industry trends. Is there a certain time of the year where certain companies are not doing so well? So if you're selling swimwear, maybe during the winter months in some locations, you're not going to sell as many products. How are you going to mitigate that? The second principle of financial management for small businesses is to manage cash flow effectively. Cash flow refers to the amount of cash that flows in and out of your business over a specific period. Effective cash flow management involves forecasting cash flow, monitoring cash balances, and managing collections and payments. By managing cash flow effectively, businesses can avoid cash shortages, minimize the need for borrowing, and maintain financial stability. The third principle of financial management for small businesses is to manage debt and credit effectively. So small businesses often rely on loans and credits to finance their operations and investments. This is totally fine, but effective debt and credit management involve understanding the terms and conditions of the loans and credit lines, monitoring interest rates and payments, and maintaining good credit scores. So know what is expected of you as the borrower. By managing debt and credit effectively, businesses can avoid excessive debt, maintain good relationships with lenders and creditors, and access credit when needed. Eventually, your business is going to get to the point where you're making a substantial amount of money, and your bank will assign you your very own representative. So you want to maintain a really good relationship with them. The fourth principle of financial management for small businesses is to monitor performance regularly. Effective financial management involves monitoring performance metrics such as revenue, profit margins, cash flow, and your return on investment, often known as ROI. By monitoring performance regularly, business owners and managers can identify areas for improvement, make informed decisions about investments and expenses, and adjust your financial strategies as needed. So managing finances is critical for the success of any small business, which I already mentioned. Effective financial management involves creating a budget, managing cash flow, managing debt and credit, and monitoring performance. So by following these principles and incorporating them into your financial management strategy, you can maintain financial stability, minimize financial risk, and maximize your profitability, right? Your bottom line. You want to make sure that your business is profitable. So now let's talk about how exactly you track expenses. To track your expenses, there are a few things that I recommend you take into consideration, such as separate your business and personal expenses. So keeping separate accounts for your business and your personal expenses makes it a lot easier to track your business expenses because you're not sifting through your own personal finances. Next is use accounting software. I love QuickBooks, but you can use Xero or FreshBooks, and they can help you track your expenses more efficiently. So software tools like this can help you categorize expenses, create reports, and automate certain tasks, which makes it a lot easier to manage your finances. So for example, I have my CPA, so my accountant, pays himself every month. My QuickBooks, when they see that transaction, it automates it. It automatically knows that this is my CPA, this is their firm, and it automatically categorizes it for me. So all I have to do is just make sure everything looks good, they're taking out the correct amount of money, and that it was paid for. Third is going to be to keep receipts and invoices. So you're going to keep all the receipts and invoices for your business expenses. And these documents they're really important, especially if you are going to be audited. So I recommend that you create a digital file. Back in the day, you'd have file cabinets. Now you can just scan all these receipts, take pictures of them in QuickBooks, and just maintain that file. I recommend, sending it over to an external hard drive and keeping that external hard drive for 4 to 8 years. So you can put, honestly, every year on its own flash drive and then just store the flash drives or external hard drives. Next is going to be to categorize your expenses. So you want to categorize them into expenses differently, such as office supplies, rent, utilities, travel, and entertainment. This will help you see where your money is going. Now, QuickBooks does this for you. So what you can do is you can export a report or a chart and a color-coded chart to see where your money is going. How much money are you bringing in and how much of that is going into these different categories. Next is going to be to reconcile your accounts. So you're regularly going to reconcile your bank accounts and your credit card accounts to make sure that your transactions are accurate and up to date. So you're going to compare your bank statements with, your software, or if you're not using a software, your Excel spreadsheet. Last is going to be review and analyze your expenses. So review them regularly to identify areas that you can reduce costs or improve financial performance. Analyze your expenses to see which areas are the most expensive and look for ways to cut your costs. Now, for my businesses, I do this monthly. I recommend if you're first starting off to do this weekly. Just take a look at what you're spending, money on. This is really going to put things into perspective for you and help you maneuver and manage your business more effectively.